May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the New Zealand dollar versus the US dollar. All right, now, again, I like to say that when you trade the New Zealand dollar futures on the spot, you are automatically trading against the US dollar. So you're looking at NZD USD essentially. All right. If we look at the monthly time frame, I want you to see something. All right. The big picture. Since we've reached this swing high here on July of 2014, it has been bearish. Yes, there has been periods where price pulled back, and it was bullish during these months. All right, it was bullish during these months, but you always have to have in mind what the bigger picture is. Why would something be bullish? If it's in a downtrend, it's because it's just a retracement. That's it. It's not a reversal. It's a retracement. You're looking for the lower low, the lower high, the lower low, the lower high. And now, what happened here? Did we get a lower low? No, we didn't. We are inside this trading range from top to bottom. Inside this trading range means that we are still bearish until this high is taken out. Once this high is taken out, then it's bullish. It's not. Uh, you have to determine when that pullback comes. Is that a retracement or is it a reversal? All right. It's confirmed a reversal once it goes past the swing high, the larger swing high. I hope you understand that. If it goes past this low, not this one, this low, then we have confirmed that price is still bearish and that we are still making lower lows, lower highs, lower low, lower high. We are still in a bearish trend. You understand? Okay. Uh, uh, when you see that pullback, when you see the prices going against the larger trend, then you got to ask yourself, are we retracing or are we pulling back? You have to be able to determine what is the end of the retracement. Is the retracement over? That means, like right here, is this retracement over, or are we going to pull back above that high? You start to look for the uh, the break of market structure. Okay, without getting into too much more than that, you look for that break of market structure, whether it's bullish or bearish, depending on the trend. And let's just get to the current stuff here. Over the past, since 2022, October 2022, price did pull back. All right, back. I think we're still in discount, if I'm not mistaken. I think we're still in discount. If I put my Fibonacci retracement tool on this, you can see that we are. I think that's the end of it here. All right, we just pulled back above the 50% of this trading range. That is um, discount. I mean, premium prices, and this is discount prices. You want to take your longs from discount. You want to take your shorts from premium. All right, we just peaked above it, and we've been moving sideways since 2023. Okay, well, 22. I'm sorry, and that's a lot of months. So what are we looking for? We're looking for accumulation here. All right. What you can see is accumulation here. You're looking for the next step. All right. Thinking in the power of three, we're thinking accumulation, manipulation, and then distribution. All right. And the accumulation is very clear. We've been moving sideways, accumulating orders. All right. The manipulation comes with sweeps. We see this sweep of the high here, and then price comes down. All right. And we sweep these lows. That's sell side liquidity. All right. But did we sweep all of the sell side liquidity? This is the important low. All right. A close beyond that, a close beyond that would indicate if if we're going to be attacking that low. All right. That's the way this works. All right. The same way a close below these would indicate this one would be the next target. based on proximity of the liquidity pool. The liquidity pool, the sell side liquidity, is right below current levels of the market. All right. The next area up is here. All right. This is the fair value gap that was created on the way down, and price is closer to this liquidity pool than this one. What we're looking for is an external to internal liquidity run, right? And you can see after this external liquidity was taken, we're looking for an internal, right? There is none here. Look in this bullish leg of structure, there is no bullish fair value gap. In the absence of a fair value gap, you're thinking that the point, the target of liquidity will be the opposing external liquidity. And here, and here, we found these lows. All right, those are external points, but this is the external point that I have my eye on. All right, now I want you to watch. I want you to see something as I point this out. You see this candle here? Big bullish candle. Price came down, changed direction, bullish engulfer, all that good stuff, and then we see the follow through. All right. Look at the size of these candles. Look how they look. All right. What I like about this is that we can see the opposing side of it. A big old bearish candle. All right. Followed up by another one. All right. And again, we see a fair value gap similar to this one. All right. But here's the deal. Here's the difference. This is a bullish fair value gap on this side, right? Here's the difference. This one was made, but you don't see the sweep of external liquidity here. All right. You don't see the sweep of external liquidity here. Where is the sweep down here? All right. We don't have one. All right. So it's, for me, it's not something that I look at. I don't look at this bullish fair value gap and think price is going to use that to go higher. It ran right through it. All right. This one is different. This one swept liquidity, swept the buy side liquidity here, created this very bearish, very aggressive candle with a displacement. All right. Uh, Indicated by this fair value gap. Price pushed down, closed below the previous candle low, and also not it. This isn't a candle close. I'm sorry, because we still have like a week left. Yeah, 4 days, 5 days left. Uh, but you can see price has pushed lower than these lows. Was that the point? Was that the intention, or is this the intent of the market to bring prices down here? Now, I want to tell you that market sentiment, all right, is such that, let me see if I can bring it over there to you. Uh, if I can look at it, I'm looking at my other screen right now. All right. Yeah. If I can bring this on over. All right. See the market sentiment here. All right. Let me get this open. All right. You can see at NZD USD, 85% of traders, retail traders, are bullish. All right. They're buying it. All right. What does that mean to me? I want to be selling if the majority, a large majority, when it gets like 85 to 90%, I'm thinking the market makers are going to go the other way. All right. Let's look at the hedge funds real quick. Hedge funds last week, I shared this with you last week, that they were adding to longs and shorts, a little bit to the short. Longs. They added eight. What is that? 1,000 long positions, but they added 4,477 short positions. They were added to those short positions. All right. This past week, rather, reported on Friday, they added 5,000 more. They've added about 10,000 shorts. And the longs that they opened up last week, they closed it this past week, the previous week. They closed this just this last week. All right. So uh, they're adding shorts. These are the big boy, the institutional traders. All right, they are betting against the uh, uh, retail, which are you and me. All right, but I want to follow behind the uh, footsteps of smart money. All right, smart money says they're adding shorts. I want to get on the short train. Okay. Uh, so you can see why I would be thinking prices are probably going to go a little bit lower. All right, because of the proximity of this low, the sell side liquidity, the sell side liquidity pools was pretty good. A full sweep of that low, this low, and this one is going to uh, uh, can bring prices back up to the equilibrium of this trading range. All right, and what I'll be looking for during that time is, are we going to create another uh, bearish fair value gap here? Sorry, boom. We do. That's I believe price is going to use that to go for lower prices. Let's look at the weekly. All right, if we go to the weekly, uh, you know how trading view does when you switch time frames, things move over. Drives me a little nuts. All right. So on the weekly, you can see how price last week when price closed below that low and this low, closed below it. All right. We also closed below the previous weekly low. All right, which indicates that the Friday's low that was created is probably going to get swept, if not traded through. So we have an indication that we may see price continue lower. It at the very least to take the previous weekly low. All right, but this low, that big sell side liquidity pool, that is very close. Now, if price decides to pull back, we haven't seen a significant pullback in this whole bearish leg of structure. If price decides to pull back, where is it going to pull back to? There is no fair value gap. When price pulled up and then back down, the sellers got involved and said, no, no, no. We're bearish. We're pushing price lower. Uh, it negated it, invalidated any formation of a bearish fair value gap. All right. So if price does want to turn around, it's probably going to go past this point, and probably to the weekly fair value gap, which is overlapped by this monthly area for uh, for a bearish fair value gap. All right, so there's an overlap here. So I'm looking at this area right around 0.60330. If price comes up here, there's a pretty clean path to getting to this area. All right. What I would look for as soon as price hits this high, the high again is at uh, 0.60, call it 0.6040. All right. Once it gets past 0.6040, I will be looking for shorts. All right. That's if we get a pullback all the way up there. All right. But in order to get up there, there has to be a catalyst. That catalyst may come, I think it's Tuesday or Wednesday for the what do you call the interest rate decision that then New Zealand dollar is going to have. Wait to trade this until after that announcement. It may be a big nothing burger, all right, but I am bearish. My bias is bearish until that interest rate decision comes up. Again, I believe that interest rate decision is coming. That's contracts. It's coming on uh, what is it? On Wednesday. I will check it real quick. Looking at the calendar here. If I can just get this all to be read, that'd be great. That'd be great. All right, because my time is getting short. Apply the filter. All right, and where's it? NZD. NZD. That's on Tuesday. I'm sorry. That's on Tuesday. All right. So Tuesday, late Tuesday, matter of fact. So that's what I'll be looking at. I'll be waiting until after Tuesday, and that I'm glad it's happening earlier in the week. So that's what I would suggest. All right. Now, if we go to the daily for a last thing, all right, you can see again, I'm looking for ERL to IRL, IRL to ERL. That is internal range liquidity and external range liquidity. Internal range liquidity are fair value gaps, period. All right. You sometimes it can be an order block, but mostly I look for fair value gaps, whether they're bullish or bearish, depending on the trend. All right. The external range liquidity are lows and highs. Okay, lows and highs. All right. Price has pulled back to an internal range liquidity point, this bearish fair value gap on the daily, and you see the response and price close below the low, breaking that low here. It's a tentative, very, you know, it's almost marginal close, but it's still closed. All right. And it created a bearish fair value gap along the way. All right. If price pushes up here, it could use that that bearish fair value gap, a very thin one, to uh, to take price just a little lower before a larger pullback ensues. All right. So I'm going to keep my eye on that. I would suggest you do the same. All right. If price breaks that high, we are on our way up to this high. If price breaks that high, right around 59,200, all right, uh, uh, we're going up to the area I had talked about earlier up here, where we have the overlapping of a weekly and a monthly fair value gap. I would be looking after this high, like I had pointed out earlier in the weekly uh, um, time frame. Once we go past that high, I'll be looking for a bearish setup on the lower time frames. I'll be looking for a high, a higher low, a higher high, and then a lower low. That's what I'll be looking for. I'll be looking for price to pull back into this leg of structure for an internal liquidity point, a bearish fair value gap, and then I take a high probability trade to the downside. That's what I'll be looking for in the lower time frames. All right. I hope you enjoyed this video. It's a bit long for an individual currency, but I happen to think this is going to be one of the better trades this week. All right. If you agree or disagree, leave me a comment. Tell me what your thoughts are on this one. All right. And do not forget, if you enjoyed the video, hit the like button, hit the boost button if you're on TradingView, and I will see you in the next video. May profits be upon you.